Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, September 4th, 2020. Happy Friday, everyone. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. In the previous session, we had a huge sell-off right here in the ES. The range for the day was significant, and it amounted to basically 410% of average daily range over the prior 2-week period. That's significant. Price pulled back right into the monthly pivot range right there, which is a higher value relationship, and it's also back inside the PIMA trigger zone. And again, this looks like an opportunity again where bulls are coming in to defend for a shot at perhaps trying another leg higher, or we could be looking at a situation where price pushes higher back to 3,500 or 3,505, which is yesterday's midpoint, and then begins to find resistance, at which point we may have found our blow off top and we may be looking for a wider pullback ahead. At the very least, down to the previous month's midpoint, but perhaps even as low as the previous month's low here. The previous month's low comes into play at the 32.5475s. That's this level right there, and that's right here, the August low. The other thing you'll notice is the FOMC key level from July 29th is right here, and that's right at 32.39 quarter. So somewhere between 32.39 and 32.54 could be a target down the road here if price can't stay above the midpoint of the previous month's range here, which is right around the 33.85s. So again, that's going to be very, very important here. Can price continue to hold 33.85 on any pullback, or are we going to see a violation there? Because that would open up the next zone down. Right now, again, this market on a pullback phase, it's hard to bet against this market. It continues to be a very good buying opportunity overall. But on the upside here, we will know that there's issues ahead if price cannot reestablish acceptance back above 3,500 to 3,505. Okay, let's take a look now at the NQ. The NQ also had a significant down day in the previous session. Not quite a 400% of ADR day, but it was near that number, 300+% of ADR. It has pulled back nearly to that 11,500 level. For those of you that joined me for the monthly market outlook, one of the levels we did talk about was the 11,500 and how we may see a pullback into that zone and how it could take one day to get there or just a matter of days. And you can see nearly by itself it got there yesterday. Here today, almost there as well, 11,582 halves. But that 11,500 is very, very important. There's an LVN there. It's the previous month's midpoint as well from the rally that we saw throughout the month. And again, that's going to be the level that bulls need to keep bid here in order for this trend to remain intact. As soon as it fails to hold that 11.5 on a daily closing basis, that stretches this thing all the way back down to the 10.845 half. That's the previous month's low price right there, with a shot to retest that July FOMC key level below, which is 10.615 quarter. So somewhere between 10.615 and 10.845 could be a nice target down below if price can't hold 11.5. Again, this market's been very strong. Pullbacks, even one-day pullbacks or multi-day pullbacks up to 5 days have been bought for a continuation higher. 11.5 is going to be the key level to watch here to see if this thing can go into the upside. Again, the level above would be 12K and into the previous session's midpoint, which is basically 12.050. So that zone's going to be important, very similar to that 3,500 to 3,505 zone for the ES. If price gets up into this zone and can't find acceptance beyond it, we may have had a top here where we start to see this thing push lower. All right, let's take a look here at crude oil. This one is up right now about nearly 0.2%. We've seen a big pullback over the last couple of days, and in measuring that pullback against how we usually see these pullbacks here, it's right in line with these pullbacks we've seen. And each time we've seen a major pullback, we've seen the bounce back up. That's been time and time again. So this pullback has been significant. We stretched it out to the 40.22 low, and a buy signal developed as well. By the end of the session, we had that buy signal right there. The midpoint retest is around 41s, and so in the trading room yesterday we talked about a trap below 41 could be a buying opportunity, but price really needs to get back above the 42s up here to get going, because right now what you're also seeing is bears come into play at the previous session's high. So if that is going to be a rejection or a failure of that point, it could put pressure on the 41s, and eventually we could be closing below it. So right now we have the battle lines drawn. It's kind of that 41 zone right here and the 42 area up here. We could see a little bit of absorption in that zone and some trading range action, kind of like a day like this, before we see the actual follow through in the next day. So right now, keeping an eye on 41 to 42 as the trading range, fading the edges with an upward bias until proven otherwise. All right, let's take a look lastly at gold. Gold here had a 60-minute head and shoulder pattern here a couple of days back. We talked about the 1960 level. If it gave that level out, it would open up a return back to 1908 to 1910, which is that level right there. And so far we have continued to hold below the 1960 level. Additionally, we continue to see lower lows here as well, and we could be looking at a continuation toward that 1910, maybe even as low as 1900. So the last couple of times we had this low and it took it out a little bit, then it took out this low a little bit and bounced. Perhaps we need to dip below the 1908 to 1910 and get into 1900 for another little bounce back up. But right now, between 1900 and 2K, that's kind of the trading range. That's the trading range. Until proven otherwise, we have a great uptrending market as well. And again, even if we were to drop, I continue to mention that this zone between 1830 and 1870 continues to be a great potential bear trap below that key range low here, and that could get us going back up to the midpoint of that range, which is 1981.70, and perhaps even go across the range when it's ready. So right now, in the near term, it appears as if gold is weak. Any failure to get back above 1960 suggests a move back toward 1900 in the near term, with a shot to see even a push down toward the 1850 zone. So again, any test below this level could be a great trap area. All right, that is it for now. We'll see how this plays out heading into the long weekend. Again, the Labor Day holiday weekend here is in the U.S. for Monday's market, so this is the last pre-market video until next Tuesday morning. Please be sure to like, share, and subscribe, and we'll see how this plays out here heading into the long weekend. See you all in the trading room. Take care.